Well, Mark Lackey is the Executive Vice President and CHF Capital Markets, and good to have you back.
It's always great to be here, Pat.
Okay, natural gas.
Yep.
It's not doing very well.
Well, you know, Pat, if you remember the last time I was on and what we've been saying recently in our blog, we were suggesting that natural gas could very well have a problem this winter, even if the weather was normal.
Yeah.
Because we were seeing such supply growth that we were getting surprised at just how fast it was growing out of the U.S. in particular. And then when I started to look at the numbers, Pat, fact is a lot of this gas has condensate. It's called wet gas. And of course, that is a lot more valuable than dry gas. So a number of people can produce this gas at $2.20. So I was suggesting $2.50 to $3.25. I've kept my forecast as a range in place, but I didn't think we'd be down here at this level in January.
What are we right now?
We're at $2.60.
Oh,
yeah. So yeah,
okay.
I mean, I thought we'd be maybe $2.50 in March because that's a seasonally weak time period. What are we going to be in March? Well, I guess we'll wait and see, but it wouldn't surprise me if it even went a bit lower than that. I still don't think we'll get some recovery though, Pat, because demand is pretty strong, and the industrial demand
because
is
of the
pretty
cold
good.
weather. But
right,
we're not getting the polar vortex.
No, we're
we had
not.
last year.
And, well, let's go back to last year. That's a good point, Pat. One of the reasons I think one of the reasons I think prices are down. We're 24% higher in inventories right now at this time right now as we were last year.
Yeah.
So yeah, last year
we had the ground.
We had some pretty cold weather last year, as you remember. But even the industrial demand was a little better as well. So it's been a combination. It's largely weather, which hasn't been too cold. It's been more like normal. It hasn't been mild, or I wonder where this price would be. It'd probably be $2.30. So in the short run, I think we'll see some upward movement as we go through the year. But I'm not maybe as keen as I've heard some people say we could get back to $4 in 2 years. I don't see it. I mean, I think we're going to be somewhat range bound. Remember one other thing in North America. $3.50 to $4,
yeah,
you start competing against high quality coal. So, there is a limit here, I think, in the next 2-3 years where I think natural gas can go. So my advice is buy the low cost condensate players, or maybe the low cost service players.
But Mark, to be fair, your comments on natural gas have never been about the domestic marketplace, and that you don't see the opportunity domestically, right?
Absolutely. I mean, I'll buy some selected plays, but I like China.
Yeah.
And people say, well, China's slowing down. Yeah, it's doing about 7% growth right now, and it could go a little lower. But at the end of the day, Pat, China, remember, they're trying to move dramatically into natural gas, and they're trying to basically triple the amount of gas they use in the next 5 years. Why? Well, anybody who's been to China recognizes that some days the air is okay and some days it's pretty bad. And they recognize that low quality coal is what they're trying to get off of. And the only way to do it is to go to more natural gas. So that's what they're doing. And then go to Europe. Your prices are higher in Europe, Pat. They're $4 to $8 because, there's more demand in Europe. Frankly, a lot of the coal in Europe is gone largely because it's mined out. So natural gas has a competitive advantage in Europe, and therefore you're seeing higher prices. Plus, the Russians
what
are
the prices in China, and then what are the prices? So
well,
we talk about $2.50 here.
Well, that's right. In China, you can get as high as $14.50 in MCF.
Yeah.
Now, people
really?
say
$14.50. That's pretty
right.
good.
Well,
but doesn't that improve your LNG marketplace?
Oh, absolutely.
Yeah.
Look, there's a great opportunity for LNG if we can ever get all of the sides together, and particularly some of the opponents who have various reasons for why they're opposing LNG. But there's a great opportunity over the next 5 to 10 years, because I don't see Chinese growth in gas slowing down, given that they are, concentrating on moving as much as they can to gas and nuclear and getting off the particularly bad quality coal. Because they recognize that there's got
problems. But isn't that
that
why they cut a deal with Russia? Absolutely.
Now, people say to me, doesn't that worry you on the price of natural gas? Well, the deal is the gas will flow in there in 2018. But the price they're already getting is going to be in the $12, $13 range. That's what they've negotiated. Now, there'll be reopeners, Pat. So maybe in 2020, we start to see a natural gas price in China that comes down, and we see a natural gas price by then in North America that's considerably higher. But, I don't tend to look out that many years. I'm trying to concentrate on the next 2 or 3 years, given the companies I'm looking at.
Yeah, is it all China? Or you and I have started to talk a lot more about India of late.
Yeah, well, India has, I think India is the sleeper here, and I think you're going to see a lot more demand for natural gas in India. So far, Pat, I haven't been able to find a company in the junior space that has a deal in India, but I'll keep looking for that. But I do have one that has a deal in China, so that's why I've concentrated on China. And actually, I'm in Azerbaijan because that's a good price, and they're selling into the European market. So
okay, let's talk about that European market, because it's currently supplied to a great extent by Russia.
That's right.
But Russia doesn't get into China for a little while. What are the prices like in Europe?
As I said right now, Pat, you get anywhere between 4 and 8, generally speaking. So they're still considerably higher than here because, again, there's not the same competition. I mean, you know, a lot of people say, well, they got off coal in Europe because they were worried about global warming. Well, that may in fact be part of the reason, but they largely got off because there's not a whole lot of coal left. I mean, that was just the mines got mined out. So, you know, coal disappears, it gets, you know, they don't have much success with solar and wind, so, I mean, gas fits the bill there. And there hasn't been that much nuclear buildup in Europe either, other than the Russians. So. Yeah. Gas has a big advantage there because, again, as we all know, Pat, oil can be shipped everywhere in the world. Gas, it's a lot tougher to move it.
Okay, so let's go through some of your picks here.
Right.
And I think we've talked about all of them in the past.
Right.
Prime Line Energy.
Yeah. Now, Prime Line, Pat, is one that when I look at the valuation here, I say to myself, why isn't this stock considerably higher? I mean, it's trading in the 51, 52 cent range. The company's management's in town, so we did see a move up yesterday. We were trading 40 cents at the start yesterday, and we got some movement because a lot of brokers are now recognizing the story. But, you know, Pat, they're getting $14.50 an MCF. These contracts...
They're in China.
That's right. They're into China. They're in the offshore. They have all the infrastructure built. So the pipeline, they just started shipping the gas last year. So, you know, the cash flow this year, Pat, probably will be bigger than the market cap. And the EBITDA will be close to the size of the market cap. So when I've seen these situations before, I remember in the old days, Ultra Petroleum had $1 in market cap and had $1 in EBITDA. And a few years later, it was trading at, you know, considerably higher amounts. So again,
what is the proper multiple on something like that?
Well, I would say at least 5 times on cash flow. So right now, the stock probably should be trading $2.50 to $3. Now people will say, well, yeah, but there's other issues. They just started to ship the gas. And people that don't understand China don't understand that these contracts, Pat, are in place for like 7 years. So the $14.50 is going to be there. So don't worry about what the price of oil is doing or the price of natural gas in Japan, as some people have talked to me, because it's not relevant. These guys are going to continue to generate big cash flow. And remember, they've got one project and they've got a huge land position. So they're doing more drilling, more 3D seismic. You know, I mean, for disclosure purposes, I have a very big position in this company. But that's because I see this as one of the cheapest companies I follow among my whole domain of companies across all the commodities. In fact, I would argue, Pat, it might be the cheapest company I personally follow.
Oh, okay. Well, that's quite an accolade. Greenfields Petroleum.
Now, Pat, we mentioned this one as well. They are in Azerbaijan. They are a gas producer. You get $4 an MCF. It's take or pay. I mean, so the contracts are there. They're guaranteed. One thing that's happened in Azerbaijan that hasn't happened so much here is that the service costs have really dropped significantly. So the drilling companies and other people in the area have cut their costs down. Well, they just, there's a lot of competition in Azerbaijan, and interestingly enough, service companies have come in and said, okay, fine, we want to keep the business, so we're going to drop the costs fairly dramatically. So this has been good margins for greenfields that, you know, weren't existing before. Now, of course, I don't necessarily think oil prices will stay down as long as some people, but that's a whole other issue. But clearly, they're benefiting from lower costs. Now, they did have, I give them credit, this company survived the fact that its partner went bankrupt. And now it looks like they'll have a new partner within 2 or 3 months. But they hung in there, Pat, when times were tough. And that always tells me something about management. It's always easy to do well when you're doing well. Everybody gets along and it's perfect. But this management team kept this whole situation going, kept it in place, financed the situation when their partner went under. And so I give them kudos for having hung in there, because it's going to pay off here, I think, significantly over time, because they can make quite a bit of money at $4 an MCF. They just need the other partner to come in and continue to move their project forward. Okay, and this one, Bri-Chem, as well. Yeah, no, Bri-Chem, Pat's one we've mentioned before now. They get lumped in because they're a fluids producer, and the fluids are, you know, lumped in with fracking, and everybody tends to take all the service companies and says, well, they're all going down. Now, the problem with that is that some people are involved with the lower cost producers. So guess what? I mean, their business is really not slowing down to any appreciable degree as compared to some of the other people that are in the same business. So if anything, I think they're well positioned here to take advantage of some higher prices. I'm not as bullish on gas, but there's still opportunities for them to do better here as time goes on, because you'll get some additional production as we move up to, say, $3. And they're also involved, obviously, in oil as well. But their gas side is with a lot of people that have wet gas and have lower costs. So again, I would say to people, look, if you're going to look at service companies, do enough due diligence and work that you recognize who their clients are. Because some people are going to do a lot better than others. And if they've sold them all off, it should be obvious to you where you should go and buy. And that's the people that are trading well below where they should be valued, given everybody's selling everything as one asset class.
Interesting. Do you follow hockey?
Yeah, I do. I've been, you know, I've been a Leaf fan since 1959. I remember when Frank Mahaly set up Jerry Eamon and we beat the Bruins. And then I grew up in Kitchener, so I guess I was sort of involved in the Ranger organization.
Okay. Here's my question.
Yeah.
Should Las Vegas have an NHL team?
Well, you know, I know what you're suggesting, given the betting, they shouldn't do that. But I don't know. I think you got to judge everything on its own accolades. I'd rather see a team in Quebec City. I think it's a great hockey town, and I hope that happens. So if it's one or the other, I mean, I'd put a team in Quebec City.
Well, good, because our next guest is going to be talking about getting a hockey team in Las Vegas.
Well, that's interesting. I mean, it's topical because obviously it's one of the teams, one of the cities that's been mentioned.
Okay, there we go. Mark Lackey, thanks so much.
Good to be here.
Coming up, Vegas or not?